Hello and Happy New Year. I'm Joe Neighbour from Signal Centre, and today this is the latest roundup on FX markets from a technical perspective. Just before we get into the charts, just a very quick roundup on the macro and fundamental side of things. Yesterday we saw the FOMC come out with their latest minutes, and risk conditions were generally relatively calm. The Fed minutes were relatively hawkish. That triggered increased expectations of an early rate rise in terms of interest rates in the US, which we believe now will be March. The dollar reversed its losses after the Fed minutes, although gains were fairly limited against low yield units. Euro US dollar settled just below 1.1300 with an element of defensive support from the euro. We will come on to that shortly. As you'll see, there is a bit of a risk-off feel to currency markets today. And I'll come on to that shortly and by what I mean by that. So first up, we've got the dollar index chart in front of you, and overall my view hasn't changed on this. Still pretty bullish on the outlook for the US dollar, and obviously underlying support for that today, given that we've seen the Fed talking about raising rates as soon as March this year. In terms of the technical outlook, still trading in a very bullish channel, as you can see here, highlighted by these yellow bands. In the shorter term, we are seeing prices consolidate in a little bit of a range. The upper end of that range is this red line at 96.94, and the lower end, we've got this ascending blue line, which is coming in around about 95.65-ish at the moment. So at the moment, the price is kind of in the middle of that range. Ultimately, I do expect this to be resolved to the upside with a break higher, moving towards our target at 97.72. Once that's achieved, then we'll be looking for much higher prices over the course of 2022, as high as 100 for the dollar index is certainly my expectation. But for now, overall, the price outlook remains pretty bullish for the dollar index. Now, on the flip side, what that's going to mean is that the outlook is going to look quite poor for Euro US dollar. As you can see here, we've got a pretty steep downtrend which continues to loom over the price action when it comes to Euro US dollar, and therefore we maintain a bearish view on the outlook for Euro US dollar at the moment. At the moment, price is consolidating within maybe some sort of wedge formation, some sort of consolidation pattern that's taking shape at the minute. Price action is quite mixed in the very short term, so we expect to see price action remain quite choppy and indecisive, which means it's going to be quite difficult for trading opportunities, particularly if you're looking for short-term trading opportunities in Euro US dollar. So yesterday we did see a bit of green, but it was off the best levels of the session following those FOMC minutes. Bit of red on the screen today. Ultimately, euro is seen as a bit more of a safer haven asset, certainly than some of the other currencies that we look at, like Aussie or New Zealand dollar, which are heavily linked to commodities. But for me, the outlook still remains bearish on Euro US dollar, and I'm looking for lower prices. If we get a break from this wedge to the downside, then I think we can expect lower prices to be seen down to our targets at 110.58 on Euro US dollar. Talking about these commodity currencies and the impact they have, and what we mean by this kind of risk-off attitude to markets, this is the Aussie versus the US dollar. Now, typically when markets are feeling good and there's a decent appetite for risk, what you'll see is currencies like the Aussie dollar and the New Zealand dollar start to move higher, because obviously they have these links to commodities, and people want to own these currencies because they see them as being able to offer better returns than those that have more of a risk-off kind of feel about them, like the dollar and like the euro. So quite interestingly on this, from a technical perspective on the daily chart, what we've seen is maybe the completion of a kind of flag pattern maybe on Aussie US dollar. So as you can see, we saw this steep move to the downside, and in recent weeks we've seen this sort of correction move higher that's taken shape. And interestingly today, what we're seeing is a break of this flag pattern or wedge pattern to the downside. Quite a convincing one, quite an impulsive move lower, down by almost 0.9% at the moment on Aussie US dollar. And that's quite interesting, because if we close at this level on the daily chart below this support that we've got at 71.84, then from a technical perspective we complete this pattern and we can start looking for lower prices, and that would maybe mean that we are going to see risk off moves across the board, not just in currencies but maybe in equities and crypto cryptocurrencies and anything else that are associated with risk. So it's worth keeping that in mind. Technically, I really like the look of Aussie US dollar today. Probably one of the better markets to look at. We do want to see that close though on the daily chart below this support of 71.84 to really confirm this move. If you did want to speculate ahead of that, then selling now on the basis of this break, expecting this breakout to follow through to the downside, could be an option for you as well. But just to give you an idea of what we'd be looking at here, I mean, ultimately I'm bearish on Aussie US dollar anyway. The trend overall remains lower. We've got a head and shoulders top pattern here that completed back in June last year. Maybe what we're seeing is actually an even larger head and shoulders top pattern actually take place. And I'm just going to draw this on quickly to give you an idea of what it is I'm seeing. So this would be the right shoulder up to here. Bit of a complex one, as you can see, it's a bit mixed, but maybe what we saw here actually in November was a break. We've seen a bit of a retest here, and now we're actually going to see a continuation of this lower. Big targets on the downside if this is in fact what is happening. Obviously technical analysis is a very subjective topic, so what I see may be totally different from what somebody else sees, but this is kind of the view that I'm taking at the minute. So if we give this a measured move of where we expect the downside prices to be, it could be as low as 62.44 for Aussie dollar over the medium to long term. If we're taking a look at measured moves based on this being a flag setup, then the way we do that is from the high of the move down to what we are calling the flag pole, if you like. This is then the flag, and we take that from the break and project that lower. So if that'll allow me to do that, we'd be looking for a move down to this kind of region, down to 66.22. So this is where I think is the most interesting pattern from a technical perspective today. But obviously bear in mind that dollar index does look pretty bullish, although we are consolidating at the moment. Similar situation with euro US dollar looking bearish and in consolidation mode at the moment. So these two might not do an awful lot at the moment because they are or do have defensive qualities, particularly when we are seeing a sell-off in other assets. So do bear that in mind. Hopefully that was useful. I'll be back next week. Hopefully things will be a little bit more clearer. But until then, please do trade safe and take care. Goodbye.